I want you to think about the premise of having having an account of, just for easy math for us tonight, having an account of $10,000. Okay, and in the Dorian way, we try to we want you to get to the point that you can make to um, to 5% consistently month over month, right? So obviously we have some trading strategies that can do better than that. But if you had a $10,000 account, obviously if you got more, then it's just a percentage, right? But let's just base it at this evening. The premise is that you have a $10,000 account. So if you have a $10,000 account, 2% of 10,000 is $200, okay? And 5% is $500. So you start off with a $10,000 account and you're trying to make $200 that month to be able to get 2%. And if you've been trading with us for a while, $200 shouldn't be something that's not realistic for a $10,000 account. Okay? So I'm going to show you two basic ways tonight, right, to make consistent, income using options. So the first way, if we had a $10,000 account, and let's just say you were someone that wanted to get engaged on a daily basis, and you want to be engaged on a daily basis, and you want your learning process to be accelerated. You want to speed it up, right? So for example purposes, if you were a buy and hold type of investor, and let's say you bought some shares, once a month, and you held it, for something over a year, right? And well, that process of learning, it could take a while because you're not making a lot of transactions, and you are, just buying the shares and you're hoping they go up. And then as you learn, you probably realize, okay, maybe I can, sell some calls against my position. Maybe I can do some collars against my position. Maybe instead of buying the shares initially, I can sell a put initially to be able to eventually own the shares, but own the shares at a discount or at a lower cost basis than if I bought it at the money, right? So it's a number of different ways you can learn, even if you are a conservative buy and hold, typical type of investor that really just hoping appreciation goes in your direction over time, right? But that's you're going to learn some things, as we just indicated, and so many other things, right? How to value companies and all of that kind of stuff. But if you are trading options and you are trading a bread and butter type of Dorian Way philosophy of 30 to 60 days, well, that's going to be that the learning process is going to be a lot faster than a buy and hold process, right? But what we have come to realize is that doing a 1 DTE type of trade can significantly increase the learning process or accelerate the learning process, because you can still have all the factors that we talk about when you go through the Dorian Way School course 1, from lesson 1 to lesson 10, all that criteria that we mentioned starting in lesson 3 on how to sell a put spread. That criteria could be used on a 1 day or 1 DTE, days to expiration type of trade. And you can have a philosophy of that you have a stop loss, which will kind of accelerate your learning process, right? Or you can have a philosophy that you're going to, make one type of adjustment. So if that's the case, then you have to learn how to adjust, right? And that's, learning how to do a roll up, learning how to do a roll away, learning how to, do those kind of adjustments, at least for a 1 DTE, right? Maybe you even learn how to do a roll out. But usually the way we teach the 1 DTE, we're literally trying to win within days of expiration, and then we if we lose, we lose. If we win, obviously, that's good. But you learn the criteria, and it accelerates the learning process because you get an answer really fast. And if you have to adjust, it teaches you, okay, I have to adjust. If you if you understand, if you are trying to understand deltas, it's going to accelerate that. If you're trying to understand gamma, it's going to accelerate that. Theta and vega, it's going to really give you a great understanding of the four major option Greeks a lot faster, right? So what we're now considering is, instead of only having people do a bread and butter 30 to 60 day type of strategy for their first trade, we are now encouraging people to do a 1 DTE trade, and so that the learning process can be accelerated and you have a high probability of winning. So you're starting off with $10,000, and I just say you were going to do a 1 DTE trade, right? And I'm going to show this on the ES because it's still 1 DTE now, and it's trading this evening. Okay, so as we talked about in the past, that we try to look at some certain criteria, and for the 1 DTE, you can get detailed information by going into the Dorian Way video library and going under to 1 DTE to 14 DTE type of strategies. You can get a lot of information on this 1 DTE. So I'm going to go over this quickly this evening, but if you need more details about it, obviously you can ask questions, but you can go into the video library and really jump into that. We encourage you to do that. But one of the things I'm looking at is first, I'm looking at the VIX, right? And I'm trying to determine what the VIX is, the rule of 16, just to kind of give me an idea, what is the market expecting the S&P 500 to do? Is it expecting it to move 1%, 2%, 3%? What is it expecting, right? So this evening, the cash VIX is not trading, but normally we are looking at the cash VIX, and that's this here. But tonight we're going to look at this, and you can say it's semantics, but I tried to make things as simple as possible. So we normally say look at the cash VIX. For tonight, since the cash VIX is not working or trading, we're going to look at this this futures VIX, right? And it's basically the same. So we're going to take the 2650 and we're going to divide it by 16. So the rule of 16, and that's right now saying 1.65%. That's the expected move. Okay, 1.65%. So what we're going to do is keep that in mind. There's 1.65%, but we're going to try to round it up, and we're going to round it up in a big way. And we want to be at least 2% away if we can. Okay, we want to be at least 2% away. So if we go over here, you guys can see that we already have a 1 DTE. It was a 3 DTE on Friday, right? Days to expiration. So you can see that the call side is a 4 delta this evening, and the put side is a 4 delta. So this trade is working out nicely at this point, right? But let's just say we're going to put on a new one, and what I'm going to do is sell this 5 delta initially, and I'm going to do a 20-point wide. Okay, you can see the one we did on Friday was a 15-point wide, but I'm going to do a 20-point wide now. And then if we go to the put side, we're going to do something very similar as well. We're going to do a 20-point wide. Okay, when you learn the criteria Dorian Way, you understand, okay, you can do a 20-point wide spread and things like that. It all applies, even though this is a 1 DT, 1 days to expiration, right? So this is the trade right now. We're at the 5 delta on the call side and the 5 delta on the put side. So we said we want to be at least 2% away. So what we need to do is figure out how far we're away from at the money by doing the percentage formula. We take this short strike on the put side here, this 38.05, and we subtract the last price, which is this 39.04, and we divide it by the last price, right? So I'm going to take the 38.05 minus 39.04 divided by 39.04. That's going to be 2.5% away on the put side. Okay, 2.5% away. That is way more than the 2% that we want, right? And then obviously way more than the 1.65% the VIX is indicating at this time. So let's see where the call side stands. So once again, we're going to take this, excuse me, I clicked on the wrong thing there. Let's go back. And once again, we're going to take this short strike here. This 39.05 subtracted from here and then divided from here. That's the last price. So I'm taking the 39.85 minus the 39.04 divided by the 39.04. And so that's going to be 2% basically even. Okay. So we want to be at least 2% away, as we talked about. We rounded up the VIX rule of 16 to be able to get this 2% that we want. On the put side, we're 2.5% away. On the call side, we're 2%. Right. So the market has been going up almost I believe it's at least 12% over the last 2 weeks. Right. So this was the low. And now this is where we stand at, right? So once again, if we take where we currently trading at, 39.04 minus this low, right? This 35.09 minus the 35.02, excuse me, divided by the 35.02, that is 11.5%. So basically almost 12% up, right? Almost 12% up in the last 2 weeks of trading, which is absolutely amazing. Okay, 11.5% up. All right, so because of that, I would bet that if I had to move aside, right, because I want to get more than $70. I just say that doesn't have to be your criteria. Your criteria can be you just don't want to be higher than a 5 delta, or you don't want to be higher than a 6 delta. The way we teach it here in the Dorian Way is that we don't want to be higher than a 7 delta on either side doing this 1 DTE, right? Trying to have consistent income trading often, right? It's almost like day trading, but it's not, right? Because you're putting on the trade and you're not doing anything to that trade that day. If you're going to have to do something, it's going to be the next day. So for example, if I put this trade on right now, I'm not doing anything to this trade until tomorrow. Okay. So in this case, this is the call side is a 6 delta, is 2% away. The put side is 2.5% away. The market has been going up a lot. So in my world, I would be a little bit more vigilant or careful on the put side, because since we've been going up a lot, we might reverse and go down. So I would give myself a more cushion, more rope on the downside than the upside. If we've been up, as we just indicated, 11.5% over the last 2 weeks, then that to me is strong. If we go up tomorrow, it most likely won't be 2%, right? Or even a percent and a half. Can it happen? Absolutely. But I would bet that that's not the case. So I wouldn't want to move my deltas more than 7 delta. So if I move this call up here, then that would give me what I wanted, right? That would give me the 170 that I want here, or the $85, excuse me. I want 80 before fees and commissions. And this is 85 right now. So this would work. I would be a little less than 1% away a little less than 2% away on the call side, and at least 2.5% away on the put side. So to me, that's how I would do this trade this evening. Okay, this is the 1 DTE type of trade. Then what I would do is set a stop, right? So the stop, let's just say we received $80. Okay, we received $80. So normally we're going to put a stop at 3 to 4 times the credit that we received. So if you received $80 and you put a stop at 3 times, so then you would put a stop at 240, right? And if you received $80 and you put a 4-time stop, so you would put a stop at 320. And you decide, right? You decide how you want to put this stop if you're not going to adjust anything, but you need a stop. This probability of winning is 90+% of the time, so you're going to win 9 out of 10 times. So as long as that type of play out and you get the type of dollar amount and you have your stop, you should be able to win over time with this type of trade, right? And obviously you would try to win every week, every month, so forth. And as we talked about, starting with $10,000, you're going to try to make 2 to 5% or $200 to $500, absolute money on your $10,000. That would be awesome. That'd be a great way to supplement your income. Obviously, if you're new at it, that's a great way to kind of introduce yourself to options and so forth. And that's without doing any type of adjustment, right? But if you're going to do an adjustment, before I say this some more, once again, you can look into the Dorian Way video and get a lot more information about adjusting, a lot more information about the criteria of this trade. But for time purposes tonight, we're kind of going over it in, on a 10,000, foot view type of scenario. But if you have questions, please interrupt at any time, as we always encourage. All right, so you have, if you're going to adjust, right? If you're going to adjust, then we encourage you to um, adjust at least once, right? Or no more than once, unless you're really good at adjusting. Okay. And so that, what that means is that if you're going to have to adjust on a 1 DTE trade, it's usually going to be almost 100% of the time, one of the sides is going to be basically a 1 or 0 delta, and the other side is going to be something like in the red zone, right? And as you guys know, our red zone starts in around the 31 delta. And so then you would have to make an adjustment. And what we encourage is you make an adjustment, but you make a small adjustment, right? You don't have to do something that's significant, because you've already factored in your trade. You already started something no higher than a 7 delta. And most of the time, or one standard deviation at a time, at least the market is going to stay within that one standard deviation type of move. When you're putting stuff no higher than a 7 delta, you're more than one standard deviation. You're usually closer to the 2 standard deviation level when you're doing that, if not, right? So you're really far away. So moving it again is only going to make you more far away from that original time you put the trade on. So you don't want to do something that's too big. So what we say is, a 5 point move can be big, a 10 point move can be obviously big, 15 can be really huge in a 1DT type of trade, and stuff over 20 is just not um, common that you would have to move that much. So for example purposes, even on Friday when the market kept going up, on the original trade that we put on Thursday night, we were at the 39.30. We never hit 39.30 on Friday. So excuse me, on Thursday night when we put the call side on, we were at the 39.30. We never hit that, right? So that would have been a really good trade, even though the market went up 100 points. So you have to be able to structure this type of trade well, and you shouldn't have too many problems. When I'm doing this trade, I'm trying to get about 80%, at least initially, and then I'm okay with getting less than that if just trying to avoid losing. But initially, I'm trying to get 80%, and if I don't have that 80% within an hour or half an hour or so within the market open, then I'll look to go to 70, 75, 50%, and so forth. Some of the members, they get 50% and they're doing awesome at it, right? You guys remember me on Friday? I had that 1 DTE trade on. I didn't stay at that 39.30. I adjusted it. That was the original strike. So we battled that trade throughout the day. We wind up basically breaking even on the trade. But that trade would have been, fairly easy if we didn't adjust. But sometimes you're going to adjust and you're going to adjust successfully. Sometimes it's going to be a battle because your timing or your adjustment was just not correct. But that doesn't mean you still can't win. You still can't make significant amount of monies doing this. But you do want to learn to adjust to accelerate the learning process, as we talked about earlier. Okay, so I'm trying to get 80% initially, and then I'll drop that, and if the trade is still going on, especially around 11 o'clock Central Standard Time. So I just say, okay, I'll be okay with taking 10%, 20%, as long as I avoid the loss. Okay. But sometimes you're going to have a loss on this trade. It's a lot of members doing this that's doing really well. If you get down the cadence of it, you get down the adjusting process, how to put the trade on, have a market assumption like I talked about, and skew the position a little bit and things like that. So you can get a really good trade on at that point. So this is to me a really nice trade at this point. And so what we're going to do is we're going to put this in at $80. And if we get filled at it 180, excuse me, if we get filled at it this evening, then we'll while we're on this call the next 35 minutes, then we'll do it. But we're going to also look at another trade here in a second. All right, so this is the one DTE type of trade that you can put on to have consistent income using options. And you can, once again, as we talked about earlier, you can accelerate your learning process by putting on a trade each day. This is not like the zero DTE or the day trading. The day trading one is a little bit more complicated, and that's something you can graduate to. And the one DTE is something that you, excuse me, the zero DTE is something you can probably have outsized gains and so forth. But you can have really an amazing gains with this one DT as well, but it's going to be a little less, well, a lot less, as we've been able to experience in this volatile market. It's going to be a lot less volatile than the zero DTE. It's going to give you a chance to, you know, yeah, to win on almost every single trade. I've been doing this for a while, and we never woke up in the money. One time it was close, but still never in the money. So you will be able to make an adjustment if you have to, or you just get your stop. You just have your stop limit, and you get out of the trade. Okay? All right. So any questions before we move on to another type of strategy that I want to discuss this evening? All right. So you can, once again, make, and before I move on, I guess you can make 2 to 5%, in my opinion, fairly easily with this trade. You can make 2 to 5% in a week on a $10,000 account in this trade, not using that much capital. So for example purposes, we just put on we just did this trade here, right? So let me go to working. We just put this trade on. We put it on an 80 cents, but let's just say we decided we were going to put it on at where it was trading at the time, 70 cents. Okay, just one contract. Okay, and let's say after fees and commissions, you're getting $76, right? But we're for easy math this night, because we might have different um, commissions and things like that. The fees are going to be the same, but commissions might be different. So let's just say you're getting $80. I'm going to take I'm going to take 5 off that for fees and so forth. But let's just say you're getting $80, right? And you get that $80, um, 3 times in a week, right? So 80 times 3 is $240, right? So that's in 3 trading days. You got $240. So if you divide that by 10,000, then you have 2.4% in just 2.4% in just 3 trading days. Okay? If that's what you're looking for, right? And then it is, say, after fees and commissions, it's exact, 2%. It could be a little better than that, but I just say that's the case, right? And that's 3 days, 3 trading days. And so and the odds on you having 3 straight trading days of profits are very, very high with this. And a number of you on the call can confirm that that's the case. That's been trading this one DTE type of strategy. Okay? So, and I'm saying 2% for a month, right? Or 5% for a month. Can you do this in a week? Absolutely, with this one DTE trade. Absolutely.